Hi, Josh Denbo, consumer protection attorney. Represent people in foreclosure, sue banks, sue car dealerships, sue debt collectors. I really like my job because I like helping people. Look, there's an update that came through fairly recently. I've spoken before about the dangers that homeowners are going to face going forward as interest rates rise. We've been at really, really low interest rates for a long time. That means housing prices go up, which causes problems for homeowners in trouble. I can talk about that again another time, having to do with the second loans. But the rising of the interest rates causes a problem because that means that modified loans are going to have a higher interest rate. Back years ago, you could get a 2.5–3% modification rate. No way. No way. I recently got a 3.75% on a very contested litigation. I don't think I'm ever going to see that again. I think we're going to be 4%, 5%, 6%, and all of a sudden, you're sometimes getting to places where a modification isn't an answer, and then it's a fight or it's whatever else you need to do to try to save the house. I'm not the only one who's thinking of this. Here's what the government's done. Remember, the government, the federal government, not the state governments. State governments have nothing to do with this. The federal government has some control and some voice in the mortgage servicing industry. The federal government has a piece of the FHA loans, VA loans, Fannie Mae, Freddie Mac, a couple of other types of loans. So those products, specifically the FHA loans, and probably the others, although I haven't heard one way or the other, are providing a new modification program that it's a 40-year term with a second mortgage component. The way it's going to work on FHA loans is in order to keep people's payments low enough that they can afford to stay in the house, the FHA servicers are allowed, probably required, if you know how to ask the right questions in the modification, to extend the term for 30 years, for 40 years. So if you have a $300,000 loan at 4% interest and it's, with your taxes, it's $2,000 a month. But if you extend it over 40 years, maybe it goes to $1,700 a month. I'm making up numbers. It's only purely by way of example. Who knows what your taxes and your escrows are? The point, and the second loan component is a loan product that brings the borrower current with government money. In other words, say you're back $40,000. When you apply for this loss mitigation program, not only can you extend the term of your loan to 40 years, but the amount needed to bring the loan current is paid to your servicer, and the government takes a second loan position at 0% interest so that people can stay in their homes. Okay? That's one of the things that the current administration is doing. It's a very big deal. It's going to save a lot of people's homes. It really is. And if you've got an FHA product, if you've got a government product, you need to be talking to your servicer or talking to someone like me about the fact that you want to try to get into that 40-year term with a second mortgage, bringing you current from the government. It's a good deal. It's really, in some ways, it's better than the HAMP deal from the Great Recession fallout. All right? That's the news. More later. Stay strong. This is going to be a big fight coming ahead.